All right, so I've just wrapped up a trade sequence. It went pretty well, recorded a whole video on it. I find myself in a new trade sequence here on Friday, and I didn't really want to get into this initially because I don't like opening a new sequence on a Friday. But it's very hard for me. I was sitting here and I was looking at it, and it took me about 15 minutes of thinking about it. And this is what we call the grade A pocket. This is where we have a fresh directional change. You can see that on ATS trend. We have an inefficiency confirmed through this area. We traded right through it, and we're starting to hold above it. And this is for what I do. This is the kind of the best spot to be in. Right here is basically where we get this rejection off of that initial dot. Same thing as like one of these. Same thing as right here. Same thing as right here. That situation is more accurate for what I'm in right now. See that dot there? That's what's happening right here. And so I've put in 1/3 of my full position to test this to see if I could get in the money. It is Friday. We had some news come out. That's what caused me to close my other trade sequence. It was a great success. Didn't go to my ultimate profit target, but still was a very profitable trade. So, but looking at how things have settled out here, looking like it's not making any new lows, and I have great risk management, even if it does go against me. I find myself in. I don't like getting into a new sequence this close generally, but it's very hard to overlook a grade A situation. And also, too, this is a grade A situation that is in line with the weekly. Weekly is going long and in line with the monthly. So, it very well may not work out. It does happen, but if it does work out, this thing's going to go, it's going to go big. So, or it's likely to have some pretty good meat to it. So that's what I'm doing here. So the way I've set up the trade is very simple. It's based off of the inefficiency confirmed through here. I see that price referenced by my dot here. I've already traded through it and rejected. So what I'm expecting is generally that we're going to trade in this range and then head up through this expansion line and up towards the swing high liquidity of this current cycle. And at that point, I'd be well in the money and looking to add into the trade. Ultimate profit target is kind of the profit target of my previous trade sequence. So I would be expecting that through next week, we would work our way up to these highs up here. You can see I have an institutional level up there, and getting up there from where price is right now, it's about 110 pips. And if we blow through that, it's like 100, 150 pip opportunity, somewhere in there. That's it. But I'm only, because it's Friday, this may be a mistake, but I only went in 1/3. So just to get something in and that I could get potentially in the money, because the day isn't over and we can get a move back up to value up here. However, if we don't and we open Sunday, I would love to get another position down below these lows, closer to my risk point. And my risk point, so you can see right here, is I always like to get framework in between where I'm in, where my price is, and my stop loss. My stop loss is right here, and right above that, I have a previous expansion line from back here. So I'm basically going to use that as kind of a guard gate to my stop loss. And that way, if it does go against me, I have at least one reaction point that would the price can react from and then head in my favor. I'm also looking at this liquidity line here as well, which is the swing low point of this cycle. So I want to see how that liquidity is handled. And that's kind of how we turned off that liquidity right here. That's kind of what inspired me to get in this trade as well. The fact that we were kind of respecting this liquidity here for the moment. So that's it. It's a grade A sweet spot. If it goes, these are huge. They're big. If I lose, my risk is pretty low. It's basically at this dot. I've put my stop loss well below that because I like this framework right here. But even if it goes against me, if I start getting daily candles and I start holding below this dot, I probably wouldn't wait for my stop loss to hit if I'm around to see that at that point. But I like to give it this initial room just so that I just have some time to read the market. I wouldn't want to control my stop loss right here off of this liquidity line. That's kind of the thing that a lot of people do. They think like, I'm going to go all in on my position and I'm going to control my risk real tight. this market, it could go from right here. If you're going to control risk tight, this is a place to do it because of the grade A setup. But more times than not, this is what people misjudge. They misjudge this all the time, and it's not a fault of their own. It's just like right now, like I'm in right here. Yeah, my trade placement could have been a little better, but um, I know that I can't predict how many times, even if I'm ultimately right, that it's going to go back up through value and go into the trend phase to the long side. I know that the market could get whippy through here, just like my last video that I recorded. Um, I was in up here, but I had a position waiting down here because I knew that it could still range out around this value point, and it did, and that got my cost average at a really good spot. So I know that I'm not potentially going to call it perfectly. I might, but I know I prepare, and that's why I'm in this situation. I chose to do 1/3 because I would like to put in my other, third position here, and then maybe another third as it goes for me. So that's my goal right there. But I know I need to maintain my creativity, and I don't want to be all in right here at that point because that won't help me survive any pullbacks against me. I'll be very uncomfortable, like anyone would be. So, and then if I'm uncomfortable, you start to feel pain. You want to close the trade. I'm out of the market. So that's it. That's my zone. My entry zone is going to be from basically where I'm at down into this range right here. But I'm generally looking for this thing to pull up and get up through this value point right here and then be off to the races. So I'm hoping that all works out good, and we will see what happens. Market's going to close here in a little bit. So hopefully I get a little bit in the money before that happens, but I don't know. We'll see. All right, welcome back. So it is Monday, and a few things have transpired here. So into Sunday open, you could see that the market kind of ranged out and then started crawling down and eventually got stopped out. So I ended up having 2 positions in right here in this range because it was pretty close to my exit, as you can see. And then I put my third position right here, which was basically my last kind of bitter edge as far as risk management goes. So you can see that one was stopped out, pretty quickly. So that was it. That was my grade A trade that I was working right there, and it went through my threshold that I had established for it, and you can see it's still down right now. However, so let me walk you back through where that point was. So that point was down here below the ATS trend line. As you can see, we had a pretty aggressive move down through it, which is right here. So here's what I'm doing at this moment. So that loss, the question is, are we going to stop at the weekly ATS trend? Because ultimately, the idea that I've been working is a trade back up to the highs on the weekly. So that's what I've been working on for my last successful trade and then the last grade A trade placement. So basically where I'm at right now is I'm taking another trade based off of the weekly holding and trading out of this last week's range. Down here, you can see we have this week or the wick that traded down here close to ATS trend. I'm going to see if I get a little bit of a reaction. Also, the reason that I'm taking the trade right now to start the sequence is because I do have green box framework that is down here established. So that gives me a nice place to manage risk on. It's basically established a new range that I could use to manage the trade by. So basically I have 1/3 of my position in right here. I would get 2/3 in down here and then see what happens. Because basically if it goes down below, then I'll have that swing low liquidity right here that I could pick up another position on. For risk management, basically for both of those trades, the one I'm currently in and the one that I would be in if it comes down here and tags me in, I got my stops down here. And notice I have them below this bottom framework. So I'm putting this liquidity line right here and this expansion line in between my stop loss. And I figure that will give this idea enough room and enough reaction points to confirm that we would be turning off of this area. Also, too, notice that our sentiment's going long. And these are some of the best trades that I love these trades. Some of my biggest trades are off sentiment. So right here, we see that retail is going net long right here. So they're going long, and what we do with sentiment, we're always interested in what are the banks looking for as far as harvesting stop losses. So right here, if retail is long, then that means their stop losses are going to be below here. So whenever you see sentiment and it starts trending in one direction, it's because the banks are hitting those stop losses constantly and pushing the market. So if there's not a whole lot of interest in stop losses below this low here, chances are we're going to turn from this level and head into a big move to the upside, kind of like what we saw right here on the sentiment. And if I'm in that, by the time that the sentiment turns net short again, I should already be probably way up in the money. So it's good. It's a sentiment shift trade. It's one of the best setups that you could get. So the weekly's still long, still intact there. So we'll see if we can't trade back up at least to the high of the last week up in there and see what happens. So that's the idea. All right, welcome back. So checking in on this trade. So let's look at the progression here. So the weekly, as you can see right here, is right at the trend line. So it's just right there at basically the last the last spot it could go to before we could potentially switch trend. So how am I treating that? So I have my first and second positions in here. Put in my second position, and I've just put in my third position as we came down to this order block projection right here. You can see we touched it basically exactly to the pip. So I'm basically, from risk management, I'm looking at that order block projection as well as trend proximity. You can see my stop losses are pretty much right here. But that's pretty much it. I put in that third position. If this is going to pay, I'm hoping that it turns from right here. And then we start taking the long ride up. But we'll just kind of have to see how it goes. But that's it. I'm close to my risk out. Unfortunately, this thing's put me through the ringer a little bit more than I would like, but I've had some good easy trades before this, so it's time to work for it a little bit. So no problem. Anyway, I'm in all three positions to my full size, and just really looking at this level right here for risk management. We'll see. It's just going to do what it's going to do, but hopefully it turns off of the ATS trend there on the weekly, and we start ranging back up. That'd be ideal. So we'll see how it goes. All right, checking back in on this trade and wanted to give you an update. So as you can see, this one ended up slapping me. I had two positions. I had three positions. I'm sorry. I had one here, and I had one from down here as well that were averaged in, and rode through here. Thought I was good. Pretty much went to bed on this enthusiasm that was right here, and then woke up to this right here. And my stop losses on this, because again, I was basically working off this framework right here. We had this expansion line when I went off to bed, and I thought, okay, I'm going to give it room to come back here if it whips down. It went a little farther than I would have liked, obviously. So what ended up happening here? Well, we had the market come up and it just aggressively dipped down. Had some news come out there, and this is where my stop losses were, right there where I got taken out. So I woke up and it was about right here in this area right there, and I saw that it just barely skimmed my stop losses. And so I was like, okay, that's a little close for comfort, but whatever. And so I ended up, it was right here, and I thought, okay, let's see if we get a quick rebound, because I still think that the weekly has potential to go long, and that's the direction I've been working since I lost on the daily grade A placement that was right here. I took the weekly bounce right here, which you can see, obviously the loss is bigger when you're working with the weekly. So you got to be careful with that. But anyway, came back down and literally tagged me out. And this is the epitome, this right here is the epitome of what drives traders crazy. And I'm no exception. Like, it's super annoying, but it's happened to me before. It's going to happen to me again. It just is what it is. So what am I going to do? I took the loss, hit me, tagged me out right there, rebounded, and we're still in the game for this weekly directional change. So I got to brush it off. I got to see, okay, what am I seeing? I just paid for some information. What information did I get? And the question is, do I still believe in the weekly direction? I think the weekly's at a bounce point. If it comes around coming into next week and particularly the week after, there could be a monster move to the upside. And so it's worth working this area. I probably, and I'm in another trade right now, but I'll get into kind of what my thought process is on that. But basically what I would have stayed away from this if we saw an aggressive move down through this area. Um, but we did end up, even though it hit my stop to like almost the pip, we still did get a rebound. And the weekly direction is still wanting to hold. We go over to the weekly here. It's still wanting to hold, close to the ATS trend line. So if it does bounce back up, there could be a pretty significant move here. I'm basically looking at potentially, I don't know if I'll be in that long, but the gap between this institutional level here and this one up here. Um, that could be a significant move, and it's worth paying attention to. Oops. So anyway, I hate to get into a trade that quickly after getting stopped out. However, I'm at that critical point. So if I'm going to play it aggressively, I kind of need to do it now. And the reason why I entered where I did was because I see that we're getting this retail sentiment holding long. And if the weekly direction is going to hold, that is potentially a clue. I was looking at this one right here because I remember earlier in the video I was saying what interest is there in stop losses. Well, there was some interest, but you could see that we're still rebounding off of it. So it shows me that the market, that the banks still have some desire to take it long. And if that's the case, this sentiment shift right here, showing you can see the shift bar happen right here, shows that that could be the bottom of this turn. And that's what I'm going off of right now. If that isn't the bottom, then I'm pretty much done with this. But this is kind of my last try to work this weekly direction at this critical point right here and see if we can't get a rebound off of that. What I'd like to see is that I would like to see, ideally by the end of today, us trading up above ATS trend and then also going over to the daily. I'd like to see that the daily is trading back up, in this range right here. You can see we have an institutional level in that area right there. So I'd like to be trading back up in this range. And basically what I would like to see is that coming into the open of the new day here in a few hours, I'd like to see that has the potential to go blue and blow through this level right here and trade up through. And then I'd like to see some aggressive movement, or to the upside. I don't know if that's going to happen or not. But either way, if I'm going to still work this opportunity, I got to try to stick the trade placement. And anyway, that's why I'm doing what I'm doing. I have this clue from the sentiment. It's given me a pretty clean, defined line where that shift is. I'm not too far off of that. Controlling my risk, obviously, right now below this low. We'll see. But that's it. It's been a little bit of a wild ride. Makes sense though, because I've had some pretty monster great trades. Before I had a decent one. Right here, and then these boxes reset on a monthly basis. But if you go back and watch my previous live trade videos, had some pretty nice moves coming up this as well. So, you got to give some back trying to play the game, and that's what I'm doing. It's not perfect. I've made a few judgment errors and different things, but I'm not perfect. I just need to keep working within the best practices, understand my directional bias, understand that this is a weekly based trade. So I could potentially be in this for a week plus, but the upside is going to be much bigger when I'm right. So just got to make those calculations and stick to your plan. And that's what I'm doing. So we'll see what happens, and I'll check back in when there's something to talk about. All right, checking back in here for a little update. So last night before I headed off to bed, I just see this thing was just kind of dying out sideways, and I wasn't really willing to hold it through London Open just because I was expecting there to be a little bit more of a rebound through the afternoon. And it didn't happen. It did happen later on, as you can see right now, but I just didn't want to risk it based on where I've been. So coming up against that overall pain threshold, and I got some money invested in trying to find the bottom of the weekly over here. And when you trade weekly bounces, this is the game you play. So you got to be prepared for that. We all would like it to just turn off that price level immediately. You got to remember, if I'm navigating a weekly candle right here, it could take weeks to make this turn. The upside's big. It's big, but weeks. It'll take weeks, potentially. So living through that, going, up and through these ups and downs, but I decided to close the trade right here. I just took a small little loss right there just to sit out. And basically, I'm like, I'm just going to wait. I'm going to get more information from this. So I've jumped back in based off the sentiment shift right here. I'm looking for the sentiment. I know that if the weekly comes around, I know what's going to happen. the retail traders are going to short heavy against it. They always do. And so when they start coming in against a weekly direction, that's typically where things hopefully will start taking off. So the way I'm legging into this rotation, and hopefully it is a rotation and it keeps going, is off the sentiment shift right here. You can see my little marks right here showing where that shift happened. And I'm hoping to get up through this swing high liquidity. Now, if we look back here, as time has developed here, let me turn off my past trade history so you can kind of see it a little more clear. You can see that we're pivoting around this level right here. See that? You can see we had a swing high, swing low. So here's 1, 2, 3, 4, 5, 6. This would be 7 expansion legs if we come through this liquidity right here based off of this origination point. So I know eventually this thing's going to break loose and it's going to go from that level. And I think it's going to be the weekly turn. At least that's what I'm hoping. I still could be wrong. So as you see, we came up through fair market value based off of that past origination point. And I'm hoping that the 7th expansion leg coming up through this liquidity is going to be the one that eventually now leads into our up move, headed up to our price targets up here. So I'm just basically looking for the weekly to turn and take out the highs here. And if it does, this is going to more than make up for any of these losses I've taken trying to survive this turn. So it'd be all good. So I'm re-entering because I'm still very close down to my out. I'm re-entering at 2/3 my position. So I could go in with one more third at some point if I want to. But that's what I'm kind of navigating because I'm kind of at that do or die moment here on the weekly chart and on this level. So it's pulling back though. That's a good sign. You can see it went through a contraction area right here, broke out, held fair market value right here, and is moving up. So that's a good clue. This very well could kick off from here. So we'll see what happens. I'm in my trade right now. I'm up a little bit, but my ideal situation would be to get up through this liquidity before the end of the day and at least be up through there and in that good spot coming into tomorrow. But we'll see. You can't win unless you play, and so we're just playing. So we'll see what happens. All right, welcome back. Checking in on this trade, and things are progressing nicely. Finally. So take a look at what's going on here. Looking for the daily to keep trading up. Have a box right here. So would like to basically get an aggressive move through this fair market value up to this institutional level and work our way towards the high. So I'm definitely looking for that to play out and happen here. And then what I'd like to see is I'd like to get to the high up here and then work our way up to this institutional level and potentially beyond. So because really the move I'm still looking for, hopefully to play out, is coming across this entire weekly range up to here and then poking out the top and getting up to this institutional level up here. So that's kind of what I've been fishing for. I knew that if it plays out, there's potentially a big move in that. And that's why I was so vigilant about what happened in here. But if that works out, even partially, it'll more than make up for what happened in here. So just looking at the benchmark prices now, just looking at that daily chart and looking at the weekly, and I'm expecting to see a progressive move up now. Now, the good thing about my 30-minute chart here that I'm watching for my entry and exit is I've gotten through framework. So you can see we got through these two expansion lines. We gapped up through those, and we held up there, came through liquidity. Now we're aiming for this liquidity level up here. So what I like is as we trade through these, then these can become essentially support levels to the trend as we go up through them. So I'm looking forward to hitting this piece of framework right here on that liquidity and then seeing, maybe we potentially range out up there, but then I could use that as a reference point to manage if there is any kind of pullback or anything that happens after that. So I don't know, but either way, that's how I'm using these right here. So you can see, in fact, I'm probably going to grab my stop loss and I'm going to put it about right here, because basically if it does pull back on me, I'm really not looking to go down through these levels again. Like this is it. This aggressive move, particularly this candle right here, should pretty much kick off what I'm looking for. And I could be wrong with that. That's definitely a possibility. But if I am wrong, then I'm still gonna, I'm gonna take my loss when we get through that framework. So, but that's pretty much it. That's what I'm looking at. And I would love to see tomorrow, just looking at these weekly candles, I'd love to see us trading at the high of last week. That'd be really great because tomorrow's Friday. If we close out at the high of last week and then we open next week high up in the range right there, it's going to be easy for that week to trend up and hit my profit target, and then that's pretty much my trade knocking it out of the park. So it'd be great. Hopefully that happens. It certainly was difficult trying to fish in the bottom. This one right here was, again, I'm not immune to these types of things, but you could see how irritating that is. And then getting caught sideways. I've been doing this a long time. I still can get shaken. Like I still get irritated and uncomfortable. But the way I get through this too, also, like these are big trades for me, but I'm not, my risk is not catastrophic on any of these. Even getting beat up a little bit in here. Like I know that if I just keep working my overall system and putting probabilities in my favor, and just working within the guidelines of best practices, I know I'm going to make it up. It's just a matter of just sticking with it. But the reason I could stick with it is because I'm not going to get blown out. I'm not going to lose a huge piece of my account on stuff like this. It's just part of doing business. So anyway, it was irritating getting that stop out right there at the bottom of that candle. And then getting caught in the sideways market was just kind of like, whatever. And then, waking up to know like, okay, it broke out. And, I would have been up from this spot right here. I would have been setting up. Instead, I was getting back in right there. So it's irritating for sure. But I'm happy that I stuck with it. And now you can see I'm way up. And I'm working, even though I took these losses, it's all in pursuit of the same idea. My idea never lost validity because it was still hanging on ATS trend here on the weekly. And I knew, I'm fishing for a weekly swing here. So I know it's going to be a big, big trade if I'm right. But it comes with stuff like this. And all the reason why all this was happening was because the daily was still trending short. The daily was still down. So day by day, we're getting these moves. And these are all moves, profitable moves, shorting the daily. So keep that in mind, that there was money to be made on the short side, but you can't do both. You can't be trading the daily and the weekly at the same time. I do go back and forth every once in a while, but I do favor the daily overall. My recommendation, if you're trying to learn this methodology, is that you stick to just, if you're doing this 30-minute in the daily, like just stick with that. Or if you're going to do the weekly, a lot of people do the 4-hour in the weekly. I've been doing this a long time, so I can kind of go between the daily and the weekly. But someone just starting out, you definitely just want to keep it to 2 time frames. Do not even confuse yourself. Because as you can see, like this got me a little sketched out. I know that the reward is big on the other side because of my experience, but a lot of new traders right here would be totally just eaten up by what happened in here, particularly if they're trading too big and irresponsibly managing their risk. This could, be a deal breaker for them even trading in a situation like this, just with the losses they would sustain. So anyway, I just want to make those distinctions. Why I personally will work certain opportunities. It's literally just experience, and you'll get there. You'll get up to that point, but you need to keep it very, very simple. This very well may be a really big move out of here, and ideally I would have been in, down here, but again got psyched out and took my foot off the gas. But ideally you'd be sitting way up on this. And the thing is, when you're trading the daily, you miss this turn. And so by looking at the weekly bounce, I was trying to be in the majority of this move because I know it's fast and furious. But more times than not, too, as the daily comes around, there will be another opportunity to leg in. It'll probably be up in this neighborhood somewhere. I don't know for sure, but there's always some framework, some way to leg in to the daily once it actually confirms a rotation and starts going long with ATS trend and everything. So that is, even if you miss a big turn like this, it typically will give you some way to get in. You just won't get the meat of this first rotation. So anyway, that's where we're at, and I will keep you posted, and we'll see how this works out. All right, and we are back. So it is Sunday, 3:40 p.m. Markets had just opened a little bit ago for the week, and just checking back in on this trade. So as you can see right here, I did put in this trade right close to what was it? It was Friday. It was like right close to market close. Like honestly, like within the last half hour. I put in this trade on Friday before the market shut down for the weekend. And this is my other third position right here, or I entered with two thirds my position and down here. So that's one I'm in the money on, and then this is the other third. So this makes up my full position. So I'm essentially letting the profits from down here on this position finance some of the risk on this one right here. And basically, what I'm expecting at this point is that we are going to deal hopefully inside this range right here, and then we're going to end up breaking these highs and be powering through this trend to the upside. So now, just kind of like how things have panned out right now, I just want to walk you through what I'm thinking as far as profit targets. Ideally, I'd like to get up to here, which is the fulfillment on the weekly chart as I've been looking at. So here's the daily chart right here. So taking a look at this, ideally, I'd like to see this come across the box. Ideally, in the next like 2 days, I'd like to see this done by Tuesday. Maybe it'll happen today. I don't know. We'll see how aggressive this kicks. But I'd like to definitely get to the top of the box right here. So that's kind of my first place that I would potentially look to take profits on this. And I want to see what I got going on over on the lower time frames and kind of what type of aggressiveness it would snap this high with when we get there. That's going to kind of lead me to how I'm going to whether I'm going to stay in or not. I just got to see what happens. I just got to read it and feel out the market. But that's kind of where I'm hoping to get, is just basically up through there. So in order to do that, notice that we're at a minor framework value here on this gray box here on the daily. So I want to see an aggressive move through that value. If we also could turn off this level, which I need to be careful with watching that as well. But ideally, I'd like to see an aggressive move through this value point on the minor framework, head towards the top of that box, and then obviously work our way up through these highs and up to institutional levels up in this neighborhood, which would be the fulfillment of this trade I've been chasing for a while here, which is this weekly continuation of the trend weekly into the monthly. And that'll be my big payday. If that happens, it'll make the losses I took down here in this turn nothing, honestly. It'll more than pay for all that stuff. So, yeah, that's where I'm at. So we'll see what happens. You can see the market after it opened here has had this nice spike up. We'll see if that holds, but that's decent for the moment. Obviously, a lot could happen coming into Asia. We got to go into London Open. There could still be a lot of garbage movement that just happens in this range, but we'll see. I mean, if it comes through Asia and it comes into London Open, coming in above these highs, that'll honestly show great strength, even through those sessions that are traditionally lower volume. To see something start trending heavy in Asian session usually means you're going to have some sort of continuation through London and New York. So yeah, we'll see what happens. But as of right now, all my I'm in a full position of my full bulk. I could still do some minor, like small positions here and there if I wanted to. But the meat of my position, like what I'm going to make the most profit on, is there. I got the 2/3 down here, and then the other 1/3 right here. So we're in business right now. So let's see how it goes, and I will update you as things pan out. All right, welcome back. It is Monday, September 16th, and it is 12:58 p.m. my time. So checking back in on this trade, and everything's progressing really well. Had a real easy move out of Sunday Open. So I'm super glad I put in that trade. I just had a feeling the way that the week closed out and everything, that we could go into an aggressive move. Also, too, one thing I wanted to briefly note is that there's basically master pattern activity happening through this area, if you could see it. And this is where, if you really study this methodology, you start to train your eye on these types of things. If you go down, I can guarantee it. Like, let's just go down to, let's say, the 15-minute chart right here. Okay. So here's a 15-minute chart, and here's that activity right here. And if you notice, we have a major master pattern origination point, which has the outline around the box, and we have another major framework right here. But notice that this is the most centralized framework through this range right here. And So we do have that value level. We have two value levels to work with. This is the one I would go off of more because it's more center in between the predominant swing high, swing low points. So we had that there on the lower time frames, but the time frames that I favor personally is the 30-minute. So moving back up to that, you notice that we don't have a box. And so what I wanted to quickly talk about is that even though I don't have a box here on this specific time frame, I can still see that the master pattern cycles, the framework is still playing out, or the phases are still playing out. And why is that? Because I know that we had a move up. Here's your phase 3, trend phase. It stops. And we pause right here. And even though I don't have a box right here, you notice how we swing high, we swing low, we swing high. Can you see the funneling out action that's happening from this central point? So what that tells me is that fair market value's in here because we are getting the expansion legs back and forth, giving us that funneling out action. And a lot of people, they obsess over the boxes. Like, how do I put the box in the perfect spot? And you don't have to be that crazy with it. You don't have to be that crazy. Yes, it is good to identify good contraction points, but those are more like warnings. Like that's like, hey, the second phase is coming up. It's the expansion legs, the swing high, the swing low, the swing high, swing low, the back and forth. That's really where you need to be good at navigating that. And we can't navigate it until it's actually happening. And that's where you get the best entries anyway. So if you look at this, you notice that we have the breakout and then the swing low, and then the swing high breaks this high, and then the swing low breaks this low. So when I entered this position right here, this is the reason I'm telling you this story, so I could tell you this story. When I entered right there, I knew that coming through this low, see how we barely breached it, was breaking a swing low point where there's liquidity. So even though I don't have a box here, even though I don't have a liquidity line here, I know because I have a trained eye on this. I've been looking at it for a lot, over 10 years, drilling down on this specific methodology, over 12 years just trading in general. I've been looking at this, studying this a long time. I know master pattern activity when I see it. I know its behavior. I know its characteristics. And that's where you want to get to. The software is extremely helpful. And particularly, if you're looking for signals with ATS Assistant, things like that, it's very good. It takes a lot of the guesswork out and it's nice. But this is the next level. This is where you start seeing it in the chart and your brain, because of just the visual recognition of seat time, starts to kick in, and your brain starts to see predominant master pattern framework without the algorithm behind it. And so that's I know people would ask me like, why did you take a trade there? Because they would be looking at, they'd be like, your last box, your last fair market value was down here, and wouldn't that be like chasing the trade? Isn't that trading above value? And yeah, technically, if we're only going off of the algorithm that I wrote, I technically do not have a line there on this time frame. I would have to go down to that 15-minute, and then I do have a fair market value. But I know, because of my experience, because I wrote the dang thing and I've been doing this so long, is that this is giving the swing high, swing low, swing high, swing low right through here. We'd go right through the center of that. There is a fair market value there because the expansion activity is clean. It's clean. It's doing what price does around fair market value. That's what it does. We know there's a neutral point when the banks are testing the highs, testing the lows, testing the highs, testing the lows. That's what expansion is. It tests, back and forth, until the higher time frames come in and commit to the market and keep it running. That's what has to happen for it to run. You have to get people that are jumping in the market in mass that are willing to hold for a longer period of time. If they're not willing to hold, it just collapses back on itself, goes back into the expansion range. And we already had a predisposed directional bias because I'm looking at the daily, and right now I have the 4 hour. I'm just looking at, I'll talk about that in a second. But we're looking at the higher time frames going back to the weekly because the expectation is that the banks are carrying the money long. So anyway, going back to that, I knew that this was a swing low point coming through here because of my experience looking at expansion. And So anyway, I wanted to clarify that. Why would I take a trade technically above value? It's because I know there's a value point there. I know there's a value point if you switch down to the 15-minute, but I can just see it because I can see the activity just because it's there, it's happening. It has the characteristics of proper expansion, and therefore I can count it. I always tell people they come to this with a very like retail trader type mindset where they are um, always looking for a specific formula. It has to be this very specific formula so they could fine tune their system, right? And I always tell them, they're like, how do I know like the exact criteria and all this? I'm like, look, here's how you know. You want to know when to trade? You need to know when to trade when it's something that you clearly understand. A lot of traders feel like I'm a trader. I need to find a trade every single day. Otherwise, I'm not being productive. That's not productive. Your job, first and foremost, is to be an analyst. That is your job. Your job is to be a professional analyst to scout out excellent market conditions that you clearly understand, that you can get a clear plan of engagement around. That is your number one job. Your next job is actually being a trader and pressing the button. Anyone can press the button. It is your job to sit on your hands and wait until you have clear framework. You have something that clearly makes sense to you, that you can form a risk management and essentially a business plan around the trade. And in this case, again, going back to here, I understand this. I've seen it a lot. So anyway, as you guys get experience with this, that's where you want to get to, where you almost, yes, we have the software, but even if you're not using our software, if you're watching this on YouTube or whatever, if I post it, you can still, when you learn this methodology, you start to just see it. And once you see it, you really can't unsee it. It's really, in my opinion, the best way of understanding market price action. So you'll get there. You just got to put in the time. So anyway, what I want to say right here on the 4-hour, I do glance at the 4-hour. My key time frame that I like, just to be clear, is the daily. I have been doing this a long time to where I could glance at the 4-hour, I could glance at the weekly. I can skate between those time frames. If you are new, I don't recommend doing that. It's information overload, and it can make things very difficult. But again, as you get more advanced, as you get your bread and butter trades down with 2 time frames, entry and directional buys, keep it very simple. You can look at some minor details and know how to weight them according to the trade you're really looking to work. And when I jump over the 4-hour, you see I have our new institutional levels coming out. These actually aren't out yet. We're just about to release them here in the next week and a half, doing some final testing. But you can see that these wicks, these candle bodies, are trading over those right here. And you can see how the 4-hour body wicks are trading into those levels, and this is how accurate they are. They're trading into those levels and holding above. What that's showing me is that there's still strength in this market. Likely, we're still going to get another breakout to run to the upside. And I'm already expecting that because if you notice, what started back here? We have a box right here, but really what is started here? What do you see inside this activity? You see this upswing right here? Boom, break towards the low, break out towards the high, break out to the low. What is this? Inside here is expansion. It happens on all time frames. Right here it is on the 30-minute, here it is on the 4-hour. If you understand where you are in the cycle, that's what I talk about. This is the cycle right here, based off of, we're going off a box. This box algorithmically is the best reaction point inside here. But there's a swing high point, swing low point. We got through fair market value right here on the 4-hour. If we're looking at this time frame, see how it gapped up through. Where's the liquidity? The liquidity's up here at the swing high point, based on this as a reference point. It's all the same thing. And anyway, looking at the institutional level and looking at where liquidity is based on this swing high point, based off of the cycle that originated back here, you can see that I can with a decent amount of certainty project that we're going to gap up to that liquidity. Question is if we're going to snap through it, which would be the ultimate fulfillment of my idea to go up to these highs over here, which would be representative of the highs on the weekly. So anyway, I know that was a big mouthful of what I just said right there. There's a lot of lessons in there, and that's what I'm trying to do. I'm not trying to only show you through these videos how I think about trading ideas and how I work through them in my mind, but I'm also using it to teach you lessons regarding the master pattern methodology. And so anytime I see an opportunity to teach a lesson or to drive a point home, I'm going to try to do that. So, and I apologize if I get a little long winded. But as you can see, I geek out about this stuff pretty easily. So anyway, I like that clue. I love how these bodies are trading in those wicks. That's something that a lot of people would not even know to look for. They don't even know that is a thing. But that's what this methodology gives us. When we have these static lines and we work off of fair market value and liquidity lines and institutional levels and the methodology behind this stuff, we get very, very, very specific price levels. And when you have a very, very specific price level that you're working to or working from or you're working towards, that's really what helps us develop these really strong trading ideas. So anyway, I'm excited about this. I've locked in some profit down here, as you can see. So both my positions are going to be, should be good to go. I feel good to lock in the profit now because obviously ATS trend is chasing up if we're going off the 4 hour. But the reason I have the 4 hour is this clue up here. I'm basically, expecting for the most part that we're going to hang above this line. I don't really want to see us come through this. I want to see us go into the next day, and I'd like to see us break straight out above this liquidity right here, and then I'm going to see how I feel at that point. So anyway, that's why I feel fine protecting my profit between my bigger position, my 2/3 and my 1/3 that I just added. And as you can see, I'm well in the money on those. And I've made up for all the losses I took inside here with spreading these positions around. I took a little one right here and some in here. I've already recovered all of that. All I need is another quick push, and I'll have another great profit on my hands. And, and I'm feeling good about that. So anyway, that's where we're at. And hopefully this is helpful as I'm walking through this, and I will check back in with you when there is something else to talk about. All right, welcome back, and I am done with this trade. So let me walk you through what happened. So just to recap, had 2 positions in. This was 2/3 of my total position that I'll go in at, and then this was 1/3 that I added later on. So we're here, both of those trades got closed out right there at that exact point where those lines are going to. So why did I get out? Well, since I was significantly in the profit on both these positions, I definitely want to watch the details and see how things go. So I watched London Open and a little after just to see if things would go in my favor. We snapped this high right here, and I was really looking for more aggressive movement through that high. And as you can see, it started to kind of die out. And so I decided to take the profit off the table and just call it for the moment. So I decided to get out, went to bed, and slept easy, and thought, well, I could always take another stab at the trend if it goes again, which I'm looking to do, and we'll see what happens with that. But as of right now, this sequence is over. So as you followed me through this, you saw we had a couple little losses here, a couple losses here. The question is, how does that equal up with what happened right here? Well, the good news is I've made it all back plus some. And it wasn't as huge of a trade as I would have liked. But basically, this is what it looks like sometimes when, at least for me, when you have to battle through losses. Not calling this right and this one right here was really, if this didn't happen, this little tiny spike down that stopped me out right there, if that didn't happen, then I would have been in a lot better shape on all this. But booking that loss basically made me lose. You can see I almost basically got back in at the top of this loss zone right here. It basically, by getting that tagged out right there, I lost this ground that I had right there. I still would have been in roughly the same price from here, actually a little bit better average, but just didn't. It was not the way that it worked out. And as you can see, I'm not perfect. I'm going to make mistakes, but the key here and the lesson I want to bring to you guys is that even when something as irritating as that happens, can you keep your cool? Can you stay connected to the overall trading idea? And can you get back in and keep working it and not let it spin you out? Because stuff like that, this little stuff right here, that will drive you mad. I know it does for me. It's very hard to deal with getting, that something that just comes up almost to the pip and tags you out, but it happens, and it'll happen now. It'll happen again. It's how we deal with it and move forward. So anyway, because I lost that, got tagged out with this trade, I think, it was hard for me to give it as much room as it transpired because I'm no different than anyone else. I'm thinking about where have I been, tracking this idea, what losses have I taken, and making those up. Because at the end of the day, I want to keep making progress and going up in my account. So that's just the call I made. It was really came to how this was going to be dealt with at the top, coming through that high. And as you can see, there wasn't really the level of aggressiveness breaking through that I would have liked to seen. So I decided, you know what? It's like 2:30 in the morning, I think it was. I'm like, I need to get sleep. I'm just going to close this thing out and get some good rest. And that's exactly what I did. So that's where we are. I'm still up. Made a decent little profit. Nothing special, but uh, basically survived working through this area. And now the question is, are we going to get a breakout through liquidity up here? And is there going to be potentially another trade to capture up through there? So that's what I'd be looking for, potentially an entry into if it works out. So anyway, that's the trade. This is one where you saw me, take some losses and battle back through it, which is this is the reality of the game. A lot of your trading, particularly when you're new to this, is going to be trying to kind of fight through being at break even a lot of times while you're getting used to it. But the key here is that as long as you stick in your directional bias, you're firmly grounded in those higher time frames, even when you have to battle back with some break even trading here and there, by not abandoning the directional bias and the best practices, you will naturally align yourself with some big moves. As you've seen in my prior videos, I've had some monster moves before this that honestly were really like some of the biggest trades I've had this year. And I count on those. I count on a handful of those that are really going to make up for stuff where I'm just kind of trying to battle and make small gains. I still want to be consistent, but this is a battle right here. So I'm counting on, by sticking the directional bias, sticking to those best practices, that I'm going to naturally land in some of those 100, 200, 250 pip moves over the course of the year that are really going to significantly impact my overall returns and P&L. So that's how I do it. You don't have to do it this way, but this is what's worked for me for a long time. So anyway, hopefully this was educational and you got something from it. A lot of lessons in here. I know I talk a lot, but hopefully it was useful to you, and we will see you on the next trade.